think that's it. So we're super happy you all are here and very impressed at everyone's bravery for taking this leap and diving into this important topic together with us. Next slide. So we received some very beautiful and hilarious responses on the registration form, and there's just like a trove of beautiful responses in there. And I just wanted to highlight some of the things that folks were saying in response to the first questions. What feelings or thoughts emerge for you when you hear the term financial advisor? And a few people did mention positive experiences with radical advisors, which is great to hear and we appreciate. But I actually didn't include those responses in here because the point that I'm trying to get across is basically that we have a problem. These are the terms and feelings that define the advisory field, and we need to change this. So, financial advisors are not working for our needs as a society, or even for the needs of many of their clients. And a lot of folks expressed frustration in the registration from personal experiences working with an advisor, and or personal experiences not being able to access an advisor. So those are things that we need to change. Yeah, and I didn't capture every, I did this a couple of days ago, and so there's a few more that came in. Like somebody recently said, financial advisor stuck in the matrix. It was very funny, and I wish I could share this whole thing with everybody because it's really a great resource. But we'll continue working with the information you shared there. Next slide. So two distinct opportunities here that we want to frame in terms of why we need radical people to become financial advisors. So one is just frankly a lack of advisors to meet the client demand, the demand for people who want to divest from extractive economies and invest in solidarity economy work and regenerative economies. Especially, if you guys are familiar with the transformative investing principles that Resource Generation just published, or there's a lot of conversation happening around this topic and a lot of demand that the current like small set of radical planners and advisors aren't able to meet ourselves. So we need basically, like, already because of the demand, we need a pipeline of advisors. And next slide. And then also we need advisors to help create that pipeline of clients as well. There's a movement need for advisors to help shift money away from the extractive economy and into regenerative economy and investing. There's a lack of radical advisors to influence their colleagues, to support more traditional clients and like dipping their toes in radical waters, and shifting the conversation while shifting money for the clients who are already game. Traditional financial advisors are gatekeeping change, and radical advisors can help open the gates. Next slide. Okay, so welcome. After this slide, I'm going to pass it to Lisa, who's going to talk about what a radical advisor is, or how we're using the term, because we made it up, and we can maybe continue as a group defining what that means to everybody. We don't have a monopoly on the term. And we're going to also frame what the broader advisory field looks like, and the fields that you all would be entering into if you became advisors. Then Leo's going to talk about a resist and build framework, which kind of moves us towards a solidarity economy orientation, towards arranging our economic work, which includes financing. And I think we have somebody that needs to be on mute. Thank you. And then we're going to get into the nitty gritty of what the work actually looks like as a financial advisor. Like, what would you be doing on a daily basis? What does it feel like? And the path from here to there. You know, what needs to be done before you can, you know, start as a financial advisor. And then, you know, what are the opportunities for continued learning once you already are an advisor? We're going to do breakout groups. Depending, I think people are probably at different stages of the process. Some people, you know, this was the first time that they considered maybe becoming an advisor when they got the email, and are just kind of curious to try it on. Other people have maybe been thinking about it and considering it more seriously. Others are not considering becoming advisors, but want to learn more about what a radical advisor is and how to support that ecosystem. So there's a bunch of different places that I think we all land. Oh yeah, and there's actually some advisors on the call who are people who are already advisors and interested in becoming radical ones. And then we're going to talk about next steps and our ideas for how we continue this conversation. And oh, I also want to say, like, any questions, any words you don't know, like, feel free to use the chat heavily. We'll try to answer questions as we go, but certainly want to flag all the questions that come up. So really, there are no bad questions, and really feel free to just, you know, shout out whenever there's something that is not clear. That will pass it on to Lisa.
Okay, great. Thanks, Hendrix. So what is a radical advisor? Actually, I was curious to hear from the group what you think a radical advisor is, maybe before you read the slide. So do you want to just throw some ideas in the chat? Like when you signed up for this, what were you thinking? Not focused on helping clients build wealth. Nice, cool. We need a new way. Love it. What else does it mean to you, the term radical advisor? Going against the status quo, invest in a new system, focus on redistribution, anti-hoarding, I love that, anti-capitalist. Focus on community wealth building. All right, well, you'll see we're very aligned with the folks in this room. So the four of us who are on this webinar, leading this webinar today, are in a larger community of self-proclaimed radical advisors. And we took a stab at defining how are we defining ourselves? How are we different? Looking for ways to support local communities and progressive environmental movements, says Emily. So I'll read to you what our definition was, obviously, which builds upon the work that a lot of other organizations are doing. So I think this wording will sound really familiar to some of you. So for us, a radical advisor is someone who shifts the financial services industry towards a mentality of abundance and cooperative economics. We cultivate wealth redistribution in the spirit of repair and return. And we facilitate divestment from extractive economies and reinvestment in solidarity economies. And we do that by remolding the tools of financial planning and portfolio management for a higher purpose, while at the same time better meeting our clients' actual goals. So we're going to break that down a little bit. I know that there's a lot to unpack in there, but we give that to you as an opening. So if we go to the next slide, you know, here's the thing. If you're a traditional advisor, you have a roadmap to follow. There's literally a textbook. There are certifications. There are professional associations you can join. You can share case studies with other advisors. If you're a radical advisor, we're sort of making this up. We're making up the field, and we're doing it within a system that was designed to do the opposite. You know, we saw a lot of comments in the chat around anti-hoarding, anti-wealth building, and that we know is what the traditional system is there to do, right? So what I want to share with you all is that we're making it up for the first time, which is super exciting. And I think that's a large part of why we do what we do, and hopefully will also sound exciting to some of you on the call. But also to say that we definitely don't have the answers figured out, and we are grappling with these all the time. So I'll read you a few of the things that we grapple with. We grapple with the question of how much is enough for us and for our clients. Like, how far do we want to, how far can we rethink this model of wealth accumulation? What would retirement look like if it's not about building up a nest egg? Are our clients' parents going to sue us if we tell our clients to give away all their inheritance? Right? So we're up against these barriers: regulation, lack of alternative models, lack of social safety nets, as you all know. So again, this is both the challenge and sort of what makes it really exciting. All right, we can go to the next slide. Okay, so as Hendrix mentioned, we're going to spend a good amount of time in breakout groups because we know we have a wide variety of people in this call. So we're going to spend about half an hour towards the end of the call in breakout rooms. And we wanted to get a sense for who's in the room and where people would want to be. So we're just doing a quick poll. Obviously you can change your mind. If you don't really know, that's fine. Hopefully, as we get further in the presentation, this will become clearer to you. So we're going to ask you to tell us if you think you would want to come hang out in room 1 with me. If you're just trying to learn more about the field, go hang out with Hendrix in room 2. If you're seriously maybe exploring becoming an advisor, room 3 with Kate are for folks that are already financial advisors that want to become more radical, or maybe you're already radical and you want to talk to us about it. Or if you're some other type of professional, like a donor organizer, community organizer, looking to build out the field, you're going to be with Leo in room 4. So let us know. We promise not to take it personally. Marnie loves the tiny animals. Hendrix built all these slides, by the way. And if you have questions about it, let us know in the chat, or let us know in the chat. How are you looking, Leo?
I need 3 more people to please complete this, and I don't know. I think I can end it, but there are 3 folks who are not going to be in rooms, but I think that's okay. If they don't select it, then I can put them someplace. So I'll go ahead and end it. They are probably getting a coffee, and I'm going to share the results. All right. Can you see those, Lisa?
Yeah. Oh, this is great. Do you want me to, should I share it with the whole group?
Yeah.
Okay, great. Okay. Yeah. So we have 18% of folks who are going to come, who are sort of in the grab bag first category, who are going to be with me. 50% are seriously, maybe probably going to want to become an advisor with Hendrix. Yeah, that's awesome. 10% are already advisors, want to be a radical one, going to hang out with Kate. And then 23% are other types of professionals looking to build a field with Leo. Awesome. Yeah. All right. Thanks all. That's really helpful.
So we wanted to take a moment to introduce ourselves and to share some stories of how people become financial advisors, particularly people who weren't born financial advisors, which I guess is technically everybody. But I think we all came from a more closer to organizing background than most traditional advisors, which is certainly not required for becoming a radical advisor. But this is just to show you that everybody starts from somewhere. So my name is Hendrix, and I am currently a financial advisor actually with Balanced Rock Investment Advisors based in Boston. I grew up in Western Mass to extremely hippie parents who didn't think or talk a lot about money, and were not that concerned about money, and although didn't feel like money was something, when we had money, it wasn't ours. Other people who had money, it wasn't theirs. So I guess I grew up with a kind of progressive understanding of what money was, but didn't do a lot of thinking about it. I studied economics in college and had a co-op focus. And I think what that economics major did for me was it made people think that I knew something, but really I don't think it really prepared me for being a financial advisor. So I don't want anybody who wasn't an economics or finance major in college to be discouraged by that. After college, I joined a group of people who were thinking through what it would be like to found what ended up being the Boston Ujima Project. And it became clear that we needed more people with a background in finance. And so at that point, I didn't have a background in anything. So I decided to go get a background in finance. And I worked for a couple different community economic development organizations doing kind of small business organizing and technical assistance, and made my way into being a financial advisor here at Balanced Rock in 2015. I've had a bunch of part-time jobs, and I've often had one foot in solidarity economy organizing space with Ujima or with the Massachusetts Solidarity Economy Network. Right now on the board of US Solidarity Economy Network and Grassroots International, but always try to maintain a foot in both of those worlds. One for accountability, and so I can keep learning, and also just because the whole reason I'm in finance is to advance solidarity economy. And that's me. Pass to Leo.
Hi, y'all. Thanks for having us and joining us today. I apologize for some of the technology issues. We have two things that we're working on currently, getting closed captioning and making sure everyone stays on mute. So if you can personally try and make sure that your microphone stays muted, we will find you. We will mute you, but in the meantime, the loud sounds and the background noise is jarring and also an accessibility issue. So thanks. But hi. I am Leo Freeman. I just realized our names aren't on here, but I have been an advisor for like 6 years in finance. I am trained as a musician. I'm a trumpet player and play a lot of other instruments, and like to be in the garden and play with my dog, and spend actually like quite a bit more time not doing financy things. I'm like reading this like I don't know about myself. I'm a financial activist and advisor. I currently am not with a financial planning or advising firm, and taking a job at a new badass community wealth co-op non-extractive lending fund that y'all likely know of soon. But most important things about me are that I grew up working class. I came into this work after doing lots of wearing many different hats, and found myself here kind of learning, and actually early on in finance in a really traditional wealth planning firm, and realizing that I could survive I could really thrive by just being able to like write an email and being a human person in the field of sea of Brads and Chads. So it was very like fun and easy for me, and something that I enjoyed, and then became pretty extractive. And I slowly moved to finding my people. The last firm I was at is called Adesina Social Capital. It's a social justice ETF management company that also did wealth management. So slowly kind of finding my people over time, but really love being a part of radical planners in this group, just mostly to build this field, which I think, as Hendrix mentioned, is really important. So I think that's everything about me. Oh, I'm an abolitionist and a capitalist, financial advisor. I will pass it on to Lisa.
Awesome. I'm Lisa Hodges. I have my own firm called Shift to Impact. So it's just me. So if anyone's interested about that journey, I'm happy to talk more about it. Probably not the easiest place to start, but super gratifying. And this is probably, I don't know, third or fourth career for me. And I came into it through like necessity when my sister and so my father passed away and my sister and I inherited money from him. And we're looking for advisors that were really aligned with us, and couldn't really find anyone. We found someone who I went to work for and then decided this is something I'm really passionate about. And that's why I do what I do, and I really love it. I appreciate what Hendrik said. I was a math major, but like, first of all, there are no numbers when you do math in college. So it's just like proof. So it has zero to do with what I do now. So please don't look at that as, again, like, don't select yourself out of this just because you maybe don't have that background. And you can teach yourself what you need to know to do it also. Yeah, and I'm also a member of Resource Generation, and I know a lot of people on the call are too. And Resource Generation's done a lot to help inform my politics and my thinking here. Yeah, and I'll pass it on to Kate.
Thanks. Hi, everybody. I am Kate Barron Alicante, all the way on the right. I don't know which animal I would be from the previous slide, but I am a financial advisor and the director of impact. I'm a CFP, and I work at an RIA, also a lot of initials. I work at a fee-only firm called Abacus, and I'm in Philadelphia. Kind of what I wanted to drop into my little bumper stickers about myself was just the fact that I didn't come from wealth. I came up through a household that, there was a lot of scarcity around money, but I share a lot of values, right, with folks who we have a similar viewpoint of the world in terms of wealth redistribution and solidarity economies. So the point being that people can have different experiences growing up with money and still step into financial advising. I didn't know this was even a field until I was well into my mid-30s. And my previous careers mostly were all encompassed in the nonprofit sector and philanthropy in particular. Having studied like international development, I just wanted to learn about how wealth inequality worked around the world, and IMF, World Bank, injustice at the level of resources globally, but then found myself realizing that as American, we had a pretty powerful influence just where we are here, and found myself working after Hurricane Katrina in Louisiana. I know I've got some friends from that time period on this call too. And really the realization from that work, big picture, was how so many roads for social change lead to money and resources, and how so many folks in the space have some, issues with their relationship with money one way or another. And it was really intriguing to me to go towards learning how money works, both from thinking about it from the level of systems, and then thinking about it from the level of relationships, like our own individual relationship with money, and then with the humans around us in our life. So I'm also, speaking of relationships, a mom to 2 young souls and a partner of a climate tech entrepreneur. So while I work in finance, I also see how what it's like for the other side trying to get funded in the solidarity economy too, and what we have a ways to go with that work for sure. So that's a little bit about me. Oh, hey, it's me again. All right, so this is the slide that's going to give us a bit of a grounding on like what is the kind of spectrum of financial advisors, which is a super unregulated term. Anyone could go out in the street, you could leave here and just go call yourself a financial advisor, but we were trying to slice it as imperfect as it is, but just sort of from the sliding scale of a typical client's kind of wealth level from left to right, and the different roles or titles folks would have, traditionally speaking, who is in this space of financial advisors. And so you see on the left, we have coaches and counselors in the traditional sense. This is more like people who work inside nonprofits who are doing kind of credit counseling, debt management, helping people be first-time home buyers, do budgeting, things like that. That's one type of role with clients with less net worth. And then moving to the right, there's sales-based advisors who I don't think really call themselves that, but they would just probably call themselves advisors. But basically the way that they are regulated and the way that the business structure is set up, they're getting paid by selling products that their company has created, right? So this is commissions, and they are selling things like mutual funds that are branded by the company or insurance policies. So that would be sales-based advisors who may or may not do financial planning, which is to the right here. If they do, it would be very minimal, maybe a one-time deal to get someone in the door. But financial planners, this is like rolling up their sleeves, doing work to help clients navigate, like, what is it that their goals are? What is the advice that we're giving for planning, modeling out future scenarios, usually giving recommendations around investments that are kind of passive portfolio allocation approach. And that they typically charge for the planning work an hourly or a retainer or a project-based fee. Sometimes they also will manage assets. So if we move to the right, the fee-only advisors would be folks who are doing various levels of financial planning, but certainly with portfolio management. And so they're going to charge for their work by charging for the portfolio, the assets that they're managing in that portfolio. Just want to flag, fee only is different from fee based, which you see down below. Just because there's the word fee there doesn't mean there's a little sleight of hand. So fee only means you're only paying for the advice. Fee based means you're paying for the advice and you're paying through some products for being sold, a little more on the sales-based advisor side of things. And last but not least, all the way to the right, for the higher net worth folks or kind of intergenerational wealth, there's family offices and family office advisors. And that those entities might be just around one particular family or a cluster of families. And it's sort of a business that's doing a variety of things in addition to managing assets, in addition to planning. There might be some in-house like estate lawyers, accountants, and maybe some client education that's going on inside there. So just to reiterate again, this is a super poorly defined field, unregulated, this term, and it's hard to pin anyone down. But we did our best. It's a good starting point.
Amazing. Thanks, Kate. Great point. Yeah, so in kind of contrast, similar looking slide, but different color. Thinking about this workshop and thinking about the folks that are in the field now, calling ourselves radical advisors. Still imperfect and overlapping and emerging groups here, but the key is that they are emerging groups. And we are seeing more and more folks come into the field in many different spaces. But very similarly to the traditional space, we have, and just to explain from left to right, I think Kate did, but also on this slide, same thing. The far left is kind of the assets under management or the client wealth bracket, if you will, on the far left, starting at $0 up to, kind of working with 15 million and up, the family office advisors on the far right. But many folks are in this field find themselves, as Kate mentioned, as coaches and counselors. These folks typically are looking to help people with access to wealth. So actually a lot of resource generation folks or folks in the room who have experience there may have worked with a coach or counselor who calls himself a money coach. And maybe they're not giving financial advice, but they're giving sort of financial life advice or doing like an emphasis on really the more personal side, understanding that your predicament, your wealth, your inherited wealth is not your fault, organizing other stakeholders in your family, sometimes very therapy like experience for folks, I think. And then moving along the line, moving to money coaches, specifically, I think actually this is more in alignment with what I was just describing for the RG folks, exploring your values and relationships to wealth and preparing clients to work with an advisor. So sometimes this is just getting things organized, but like getting your emotions around it organized so that you can kind of get to the details to go to an advisor, especially if you're going to an advisor that, as Kate mentioned, is charging fees for your interactions or for your assets or something, sort of getting all of the personal work done first. And then financial planners, they're in the middle. Financial planners can work with folks, radical financial planners can work with folks from $0 in assets under management to, approximately 20 million is like, if it's more than 20 million, it's rare, but it's kind of the ballpark. But financial planners focus on giving planning advice and modeling, modeling portfolios with an eye toward wealth building or redistribution. So that's kind of helping folks that aren't coming to the table to maybe build more like wealth for life planning, or sort of like first generation folks, or helping clients redistribute their wealth or inherited wealth. It's easy to implement public market and impact portfolio allocation. It's getting easier for impact, but definitely easy to implement public market portfolio allocation. And Hendrix will talk a little bit more about that in a few minutes. Moving along, we talked about the fee-only advisors. These are folks who do portfolio management using public market and impact investments. There are varied levels of financial planning, typically with an eye toward wealth redistribution. Again, we're talking about radical folks, and we'll talk a little bit more about the radical planners group, but these are really people who are helping people embody their values in their planning. And so oftentimes these are folks who have gone to a traditional financial planner or advisor and have gotten the answer of, like, they say they want to give away all their money. The Brad or Chad says, you're crazy, like you're gonna starve, and what about your retirement, or something 50 years down the road. And so when they find somebody who's a radical advisor, he says, yeah, let's talk about your financial plan. These are the folks that are falling in the fee-only advisory place, where they're doing portfolio management, helping you understand, sort of the investments you're invested in, and also helping you take a look at redistribution over time. And then on the far right side, we won't spend too much time on, is family office advisors. These are comprehensive management of like maybe, and maybe many folks in the room have experience with these folks, but multiple families, portfolios, and finances, and kind of that's like the go-to guy person in traditional finance. But there are people who do family office advising in the radical space. This is definitely a need for moving capital and kind of moving the needle for this space in finance, for sure, is kind of organizing some of these people that have access to a lot of different families, who are the people that are kind of the main gatekeepers. They have a heavy focus on wealth redistribution and impact investing, in part because of the large asset size. We can talk more about that later, but really just thinking about money and power, and the larger your portfolio is, the more, if you're an accredited investor, or if you're able to, you have more access to investments and impact investments and solidarity investments, I think, among those, for sure. And there's a little bit down at the bottom I'm just going to read. For accessibility, institutional radical advisors would include advising foundations, pension funds, university endowments, banks, etc. Cool. Next slide, please.
I think that's Hendrix.
Cool. I was busy finding the RG advisor database. I think that's the right link there.
I'll grab it for you, Hendrix.
Cool. Yeah, if you, I just posted something that I think is the right thing. Oh no, so it didn't. Kate, can you click on the slide one more time? There's like an animation, or can you go back? Let's see. Oh, it didn't work. Okay. Also here, I'll edit it. I'll see if I can edit it in time. So there are, as I was thinking about what differentiates a radical advisor from a traditional advisor, there were 3 big buckets that came up. And so that, okay, can you reload the page, Kate? There you go. Okay. My intention was to have it this way, and then when the slideshow clicks, then all the other terms that we use for these things, but I can just explain them. Okay, so the 3 buckets that differentiate and there may be more other different conceptions of this, but one is a focus on redistribution of wealth, and not simply across the board focus on accumulation of wealth at to the whatever extent possible. So radical advisors do financial planning, with in alignment with client goals. So there are legal restrictions for, and I think it's a good thing that we are not going to be able to redistribute clients' wealth without that being an explicit goal of the client. So that does need to be a starting point, but we'll go through a financial planning process to figure out how much that client needs for their personal goals. How much do they need to retire? Do they need to be saving more in order to meet their giving goals? And so they have all these different levers that we can pull to make a plan work. And so one way of approaching redistribution of wealth is looking at, okay, what are all the clients' goals? You want to buy a house, you want to send a kids to college, like what are all the priorities? And then what's left over, that can all be redistribution over time, hypothetically, or that could be the plan at least, and things can go wrong and all that, but that could be the plan. The other way of approaching it is, often clients come and say, I have this much inheritance and I don't want to use any of it. I want to give it all away. And so in that case, we're looking at building a plan so that they can afford to give it all away. So it's like, okay, this is when you're going to need to retire. This is how much you need to be saving, or these are the compromises you might have to make your personal goals, or maybe there's no compromises and it all works out perfectly. And then transformative investing, other terms, often we use the most popular term is impact investing, but that term is being pulled in a lot of different directions. And so like even in our radical advisors group, we all use different terms for what we're talking about here. And I really appreciate the RG and that circle of people that put together the transformative investing principles. I think it lays out really well the difference between private market impact investing that might be good and lovely, but that's not necessarily transformative. And so then we're looking at questions of how do you want to balance transformative investing with your charitable giving, with your redistribution, especially if you're taking concessionary returns on your impact investments. If you're not investing for maximum growth, does that lower your ability to redistribute? And how do you place the value and importance on redistribution versus values aligned investments? Sometimes those are in conflict. And then the last bucket is creative financial planning. So a big topic for us is rethinking retirement and rethinking what a safety net looks like and what wealth means, honestly. So our society is set up to not take care of people very well, and so we have this incentive to amass wealth to protect ourselves in retirement, to protect ourselves if something goes wrong, and to protect ourselves so that we can actually retire and stop working eventually and enjoy our old age in peace. So what are there other strategies we can use, like to lower those retirement costs and to be more reliant on each other and support each other in community, for instance? So those are questions that we help clients think through. And so it's definitely it's a balance between, I think the most important thing is really listening to the client and their goals and what's important to them, and helping create strategies to help them meet those goals and make sure all the numbers are coming together.
All right, y'all. Thanks for hanging in. It's really fun for us. Hope everybody else is enjoying. Maybe we can take a second for a stretch because Hendrik's covered a lot. Oh, I get to do the picture, which I was really excited about, and now I'm nervous because I think everyone in this room already knows this picture, which I'm excited about. Actually, I'm curious if, and I can see a series of videos here, but I'd love if we could all kind of raise our hands or thumbs up if you've just seen this, this image or are familiar with the framework of the just transition. Awesome. Okay, cool. I love the spirit hands. Thank you. Yeah, so this is something that I've leaned on a lot in finance. Yeah, thank you so much for the thumbs up and the hands. The title of this section is Resist and Build, and the first part of what I think helps us understand what resisting and building are, how they operate together in a framework, is to understand a just transition. And so this image, I love to use this with clients. If, as you're thinking about becoming an advisor, if you're already an advisor, this is a great way to sort of set the groundwork, to talk about what are we talking about here. I think we can get very granular as advisors, and clients can get very granular about what they bring to the table. So it's a great zoom out to, and I'm sorry if I try to make it as accessible as possible. There is some light writing, but I will read it out loud. But a just transition as a framework, it was developed by the trade union movement. It's a framework that is set out to resist, rethink, restructure the economy, moving from, on the left here, the extractive economy to current extractive economy, with an objective, a collective shift to the right-hand side, the living economy. There's 10,000 names for the one on the right: living, new, regenerative, democratic, all kinds of names. But this, just transition and movement generation, folks who built this graphic and Climate Justice Alliance call it the living economy. And the reason I love just sort of zooming out for this purpose is to remind everyone that everyone is needed in the revolution. We find ourselves at this really niche of a niche as radical financial advisors, but sometimes I think that can be very polarizing for some people, ourselves included. And oftentimes we need to be reminded that in order to actually make this transition from a banks and tanks economy to cooperation and caring, from the left to the right, everyone is needed. We need folks to be hospice workers and stop the bad and help usher out the nasty corporations. And we also need folks to be midwives, this is not my idea. This is a Lift Economy's phrase, but hospice workers and midwives for the new economy, and the new economy needs midwives to build the new and, create and build solutions that are visionary and oppositional. So there's lots of different pictures on here, but I think it also helps to identify that, when we talk about the extractive economy, we're talking about consumerism, as Stephanie aptly dropped in the chat a few minutes ago. We're talking about really concentrated wealth and power and an enclosure of wealth and power, talking about extracting land and labor from Black and Brown people. We're talking about militarism, extraction of resources, and moving to divest from that economy and from that power, draw down power and money with that, and to build the new on the right-hand side, the living economy, which I think we can all look at, and even just these little flat icons just look more enjoyable, thinking about a worldview that includes caring and sacredness, cooperative work, regeneration. I find that it's oftentimes the questions from clients are very similar to the questions we would get when it's the rallying cry of defund the police. People be like, defund the police, what are we going to do? Precisely. And actually, defund the police isn't even the phrase that we all actually want to use, which is abolish the police. But we're going to use defund because we're going to start there and we're going to move. Abolish is too much, funnily enough, but I think for some people, moving in that direction is very similar, where, many folks are like, well, what are we going to do? Well, actually what that's going to take is going to take, community-led, sorry, there are people putting things in the chat. If someone's chatting a question for me, please let me know. I'm trying not to watch it. But yeah, thinking about community-led safety systems and things that are actually, ways for, folks to have accountability versus just policing and police brutality and militarism. It's very similar in that way. We look at the living economy as, what are the things that we can transition to? So just transition is a framework that says, let's move from the left to the right, the extractive to the living. And it's going to take all of us to do that. And that's where all these circles come from. And, some examples of, I'll share on the next slide, but some examples on the right-hand side would be like cooperative farms and land trusts and renewable energy and mutual aid networks and worker-owned health clinics and affordable healthcare and things like that. Those would be the things we're talking about on the right-hand side. I think that's everything for this slide. Kate, do you mind going to the next, please? So under that framework, we're thinking about stopping the bad is the resist and building the new is the build. And there's an organization called Center for Economic Democracy that just published a paper, or some folks from this organization published a paper called Social Movement Investing. And it's very cool. It's like a new framework that has existed and been built by lots of folks and colleagues in the space who have been doing this work for years and years. And they actually created a great white paper. It's 109 pages. There's a great executive summary, and we're going to summarize some concepts here, but it's definitely worth a read, and we will pop a link. I'm sure somebody will pop a link, please, to that paper or the name of it in the chat. But essentially, when we're thinking about resisting and building in finance, or we're thinking as radical advisors, first of all, finance is like so jargony and so mysterious on purpose, not by accident. It's all made by design this way. So something that we try to do is simplify things and talk about, yes, the just transition framework has lots of images on it, but it's really like core words are, resist and build. And so when we're thinking about within the terms of finance, this screenshot is from that social movement investing report. We're thinking about resisting, stopping the bad, and building the new. There's some kind of transition in the middle there, we're calling it a just transition. But as you break that down further, you get to this, third space down where we're talking about what is the tactic in investments. So this is where we find ourselves a lot of times as advisors. Some of us live in multiple of these spaces. Some of us work in some of these spaces, but there are sort of 6 buckets or approaches that fall under resist and build. To resist the bad, we're talking about excluding, engaging, and controlling. So excluding might be divestment screens or short selling, something to vacate, to leave that part of the economy. Engaging might be shareholder campaigns with publicly traded companies. Controlling maybe hostile takeovers, proxy fights, funds getting really deeper involved and taking control over. And then on the other side of the transition, there's the build side. And we're talking about converting, seeding, and sustaining. Converting is worker buyouts, co-op conversions. Actually seeding the new economy is patient risk capital. And sustaining that long term is growth funds, structured exits, regeneration, and also redistribution. So I highly recommend reading this paper in depth. We are thinking about, further workshops. We might talk about this in a breakout group, but this is just the high level of how to think about this and how we look at this on the spectrum of investments. I just want to point out, great question, Lucy. We will answer these questions in the small breakout group, or if somebody can take a stab at that, please, that'd be great. One thing I wanted to mention is that this framework here, this screenshot part of it, does not include the extractive economy. So what we're talking about when we say resist and exclude, we're talking about fully transitioning people out of those extractive investments and putting them in the exclude. So on that left-hand side. So all of what you see on the left there is basically we're saying, we're done. We're starting at the stop the bad. Thank you, Kate. Yes, precisely right where Kate is. We're starting at stop the bad under resist. And I think that's pretty much all I want to talk about on that. Thanks for listening. Slide, Hendrix.
Hendrix, you want to take this?
Oh, sure. I just added this slide. Yeah, I think that I wanted, with this workshop, we wanted to demystify what the job actually entails. We wanted this to be very practical for people to understand, like, if I start going in this direction, what is my day-to-day going to look like? And every time I thought of this aspect of this part of section of the workshop that we're about to go into, this classic meme came up in my head, and so this afternoon I finally created it. So I don't know how much there is to actually say about this, other than that, what we actually do is a lot of well-phrased emails, messing around with financial planning software, of course, which I'll get into in my breakout group. But yeah, it's listening, talking with clients, like reframing, framing the strategies in a way that is not opening up too many more questions that'll get them overwhelmed and distracted, giving clear, good advice. And a lot of that does happen over email. And then there's lots of like fun little, like account opens and transfers. And okay, so I won't give it away. That's where we're going next. I'll pass it back to Kate.
All right, so I guess this is the what I actually do piece of it for from the lens of financial planning for radical advisors, right? So on a daily basis, we kind of bucket it into 4 different things that you're doing with clients. So you're helping them kind of get clear about their personal values. So you'd be, there are people who haven't taken the time to really grapple with where their wealth has come from and what that means for them. So that's a part of the journey, is to help them unpack that. And from there, what is it that the wealth that they have should be used for? And what is their personal theory of change too? So how do they want to kind of carry forth what they're doing with their wealth and vis-a-vis their values? Then the second bucket is personal goals, right, for their life. So conversations around home ownership or not, land ownership or not, family or plans for family or not, education, travel, fun things to do, self-care, and then, old age, the future. So that's, the conversations around personal goals for planning, and then more of the tactical work around, okay, so for saving and giving, like what does cash flow look like for the client, budgeting around their particular, their lifestyle, present and future and imagined. Then what are, weaving in strategies around taxes with that approach, helping them with making sure savings happening to reach the goals that they've articulated, right, in the previous box, future savings that need to happen, and then identifying what can be redistributed, what's left to redistribute, or how are we prioritizing or calibrating redistribution goals with, lifestyle and future lifestyle goals. And then the last section is, we're also in financial planning, kind of helping clients navigate systems of bureaucracy or systems of life in, Western world, in terms of Social Security, pensions, any kind of debt or student loan management, insurances, safety nets, disability, if the plan is to earn money through work, and what happens if that is not possible. Estate planning, which also I think brings in here conversations about family dynamics, multiple generations of family dynamics, and basically, understanding that the client goals, understanding the client's goals and not coming assuming what they are is really important, and then helping them feel free to play with modeling scenarios. What could be possible if, and playing with that and testing that, including what could be possible with making different investment choices, what could be possible with making different redistribution choices, different life choices, putting numbers around them, and then helping them devise strategies to execute that and give advice in kind of human language, and also just be someone that they can go to when it comes to money and know that they will be heard, and can bring, especially for a radical advisor, right, can bring their full self and their full values in the world to their money person. I think Hendrix, I'm passing it back to you.
Yeah, do we want to actually go back to that financial planning slide for a sec?
Sure.
I'm curious if there's anything in here that that people are confused about what the term means. I think probably all of these words you might have some sense of what the word means, but if people want to type in the chat any of the phrases here that feel particularly murky. Cool. So if something else comes up, yeah, something like that, feel free to stick it in the chat and we'll either address it in the chat or as we're presenting. So yeah, so that's financial planning. And often kind of we think of our work in the financial planning bucket as separate from the portfolio management bucket, but there's a lot of overlaps. There's a lot of overlaps in all of these works, this work. So that's like a somewhat neat way of breaking it down. So often you'll start with the basic structure of a financial plan, and life is always changing, so that plan is always changing. But once you have the structure of a financial plan, then the advisor is able to look at the portfolio, how to manage the investments. And so by portfolio, we're talking about the client's accounts, which hold investments. So it might include like an individual brokerage account, some individual retirement accounts. It could include workplace plans like a 401k or 403b. And so the portfolio is like all the investment assets. And so how do we want to think about, or how do we want to invest those assets to best meet the goals in the plan? And so some advisors would just say like, how do we want to manage those assets so that they have maximum growth? I think what a radical planner and what a lot of also traditional planners do is look at how to create a portfolio that is designed to meet the client's goals in the plan. So there's a couple different aspects, again, overlapping of portfolio management. One is a portfolio design. And these things, risk tolerance, value screens, liquidity needs, and tax management, that's like from the client's perspective, how do you design their individual portfolio? But as we'll get into in my breakout group, if you guys are interested, that typically like your firm will have an asset allocation or a couple of different asset allocations, like a low risk asset allocation, a moderate risk asset allocation, and a higher risk or a higher growth, more aggressive allocation. And so the client's risk tolerance, how comfortable they are with the value of their accounts going up and down, that will help you put your client into one of those categories. Also, their values will come into how their portfolio is invested on the public market side. So with traditional Wall Street public company investments, there you can use what's called an ESG strategy, environment, social, and governance. And there's a lot of advisors that do use those strategies to screen out the worst actors in public markets. But what radical advisors are doing is to go beyond just those screens. So we see those screens as kind of like the low-hanging fruit. Like, yes, we want to get out of the worst and most extractive public companies, but ultimately we want to have when you're just investing in public markets, there's no way to shift the economy towards solidarity, cooperation, democracy, equity, and sustainability. You're still investing in capitalist companies and capitalist infrastructure. So then, thanks for the acronym. Yeah. So yeah, also conversations about tax management, avoiding taxes, minimizing taxes is a big part of our industry and field. And so it's a conversation that we have with clients about how much they want to avoid taxes and how comfortable they are with paying taxes. On the one hand, I think we all believe that, you know, people should, well, maybe not all, okay, maybe there's some anarchists here that don't think that people should pay taxes, but it's common progressive belief that people should pay taxes, that wealthy people should be paying more taxes than they are. But does that mean you don't contribute to retirement accounts that you qualify for contributions to? Or does that just mean we don't want to set up like crazy multi-generational trusts and do a lot of backflips? So there's going to be a balance there in how much we focus on tax minimization, because also when you minimize the taxes you're paying, that you know, theoretically means you can do more redistribution to social movement organizations, which we all know our government is not. Okay, so then there's a bunch of fun administrative tasks, and a lot of firms will have like an office manager or kind of a client services department that will handle account opens, asset transfers, account maintenance, like changing your name or changing your address, things like that. Performance reporting, like monthly or quarterly reporting on how the investments are performing. Tax reporting, like sending clients their annual tax forms, and impact reporting, you know, like how many jobs are being created with your impact investments, and you know, how many of your impact investments are owned by BIPOC founders and things like that. Yeah, so I think, and we'll get into this later on, but like administrative positions are a good place to start. I started in admin before, as just like to understand what the work was before becoming an advisor. It's a good way to get your, you know, your foot in the door. Then there's the actual investments in your portfolio. There's public market investments, and then there's private impact investments, and which can include transformative and non-transformative impact investments. The public market side could include individual stocks, like buying companies directly. It could include individual bonds, lending to companies directly, index funds and ETFs. These are types of mutual funds. It might also include actively managed mutual funds that aren't based on an index, which is just like a list. And so if all those terms just like went over your head, don't worry about it. This is the first time you're hearing about this. It doesn't matter. This is just the first time. You'll understand a little bit more next time. You don't need to understand all this right away. On the private impact investing side, there's a bunch of different types of investments. Some common ones are community funds like CDFIs, community development financial institutions, private equity funds so basically their private equity has two meanings, but what I'm talking about here is equity that is private, private debt funds, direct investments like lending directly to a small business or startup, and crowdfunding, which is a type of a platform that facilitates direct business investments. So we have a poll actually about this slide, because we wanted to do a emotional feelings heart check-in at this slide, because I know there's like a lot of jargon on this slide. So Leo, if you could pull up that poll. The question is, which of the following emotions describe how this slide makes you feel? Mixed and conflicting emotions welcome, but it is a single choice thing. So just pick one and that'll give us a good sense of whether to slow down.
And Hendrix, I think we have about 2 minutes until we want to go to breakout.
Super.
Okay, last call to let us know how you're feeling. Go ahead and select one of those emotions, please. Got about 75% of everyone did it. Okay, Thanks all. I'm going to go ahead and end it and share it.
Which of the two categories do you love, Marnie? I know one of them.
Yeah, private impact investments. But I am really curious about portfolio design as just a way of thinking about things.
Cool. Okay, so the responses. I don't know if you guys can all see the responses. Yeah, you can. Okay, so we have 23% excited, 3% bored. That's the one I was going to choose. 29% determined, 16% intrigued, 23% overwhelmed, reasonable, and 6% other. Okay, so kind of a spectrum, but good to know nobody's confused. Okay, so next slide. The path from here to becoming an advisor and working with clients to move their money and help them make plans that are in alignment with their values. I think, people on this call are probably coming at different stages. But I think across the board, a good place for everyone to start would be to this, and it kind of goes from left to right. Join a radical advisor curious affinity group or explore or learn and study with. To explore or learn and study with. So we're going to be creating kind of recommended study groups and emailing you all with recommendations of people you might want to schedule a time to chat with and just explore more of your questions with. We're also offering times for people to schedule with us and other radical advisors to talk about, where you're coming from, where you want to be going, what you're interested in, what you're not interested in. And so I think like wherever you are on the path, those seem like good places to start. But, we certainly don't have to start there. Next would be practice giving yourself financial advice and helping friends and family. So, looking at your own investments, whether that's, a few $1,000s in a Roth IRA or your family inheritance, or if if you don't have investments yet, starting out with $100 or whatever you can afford, and just starting to experiment and learn about the world of investing through your own portfolio. And you can feel free to talk to us about that as well. And then if you're feeling confident, like looking at other people's situations and trying to understand, for other people's situations, like friends and family and people who know that you're in a learning process. And I would recommend not pretending you know more than you do at any point in this process. I think, people really appreciate when you say, as an advisor, when you say what you don't know. And so that's perfectly reasonable when it's, for your friends and your family, or when you're in front of a like high stakes client, just to say like, I actually don't know. That's a great question. I'll get back to you. And then Google. Yeah. Oh, I forgot that's another part of what we do. What we really do is just like a lot of Googling. So then there are internship opportunities, might be a good way to dip your toes in the water and get some tangible interaction with these concepts. Might be repetitive, but that's a way that I always like learning. Then there are some like mini exams that you could take if you're a good book learner. So there's the Securities Industry Essentials exam and the Financial Paraplanner Qualified Professional exam. I have not taken either of these. I don't know that any of us actually have taken either of these. They might be, I think they're newer. They're kind of like stepping stones to the Series 65, which is the exam that you need to take to be a fee-only advisor and give investment and financial planning advice for a fee. And then the other one, the paraplanner one, is like a mini CFP, certified financial planner designation, which is not a legal, it's not a legal requirement. It's like a degree. The CFP is like a degree, and a lot of financial planners have it. But you don't need to have your CFP to start doing financial planning. In fact, I don't have my CFP. So then, yeah, and then get an entry-level job as an admin or assistant advisor. I actually started out at Balanced Rock helping build out the impact investing strategy, because I had relationships with small businesses and community funds, and I was just doing like social media, and then started doing admin, and then became an advisor. So if you find a place that with a good work environment, you can also find a useful place for you. Yeah, Series 65. I don't know. There's a bunch of it's a bunch of different exams. Like there's a Series 7 is like a sales-based exam. There's like a 67. I don't know what they all are, honestly. Okay. We have arrived. Leo, do you want to explain this?
Yes, thank you. I was actually just laughing because when I first asked about a Series 65 early on in my career, someone told me that it was something required by NASA. And I was like, what? And later on, I found out that NASA is the North American Securities Administration Association. It's like, it's NASA with an extra A. I was like, whoa. I was really confused. I thought the SEC and NASA were in on it, which I'm sure they are. But Series 60, yeah, the numbers in it are really kind of like the tax code. Like, why do we do a 1040 or a 540? The numbers are like where they fall within the like Uniform Securities Act, different numbers within the act. Yes, there are opportunities. Thank you so much for asking about the breakout rooms. I'm going to set us up in those breakout rooms, but and thanks for bringing back the little cute animals. I love this. And there's 4 of us there on the little animals, and then I think Landon is probably one of them for helping us with all the definitions. Thank you, Landon. So for the next section, we're going to do 30 minutes breakout rooms. They are numbered, and we'll coordinate with, hopefully, allegedly, according to Zoom, the breakout rooms. When I open them up in a second, you'll be able to self-select the room that you want to go into. Before the poll, we wanted to make sure at the beginning of the session that we didn't have 40 people going to one and then no one going to the others. So it seems to be fairly evenly distributed. But yeah, you're absolutely welcome to change from what you were in before to now, so you just be able to click join when I open this up. But essentially, it's as Hendrix described in the beginning. It's going to be breakout rooms of 30 minutes. We all kind of have our own little loose agendas and some new slides that we'll share with you. But open discussion, we'll be able to kind of come together and speak as a group. So the first group is just trying to learn more about the field. You're going to go with Lisa. Second group is seriously maybe exploring becoming an advisor. You're going to go with Hendrix. Third group is already an advisor or wanting to become a radical one. That's with Kate. And with me, professionals, advisors, otherwise anybody, you don't have to be professional. Non-professionals preferred, looking to build the field, or like donor organizers if you want to just join. You don't have to be a professional to join the group is what I'm trying to say. And you'll come with me, number 4. So please feel free to drop any questions in the chat, and I will open those breakout rooms now. And just the breakout rooms do not get recorded. That's something key. It's your secret places. I will open them up. Oh, they kept the names. Yay. Open all rooms. Okay, amazing. So if all the participants can please open up you should have gotten a little thing, and go ahead and select the breakout room, and we will see you there. I'll send a 5-minute reminder just to kind of start wrapping up, Lisa, Hendrix, and Kate, and then it'll give us 60 seconds to close it. So see you soon. Appears we have everyone. Great. Thanks, y'all.
Kate, do you want to share your screen again and talk about these next steps in our last
Yes, I do. Let me see if I have the ability to do that. Okay. Are you seeing what I want you to see?
Yes.
Okay, cool. All right. So we hope that you had an amazing breakout session. Welcome any comments, reflections, celebrations in the chat while I'm going through this next steps before we close out. So the three kind of big bucket areas we have are affinity groups, staying in touch, and job opportunities, other opportunities for learning. So for affinity groups, on the other side of this workshop, we will be sending a survey, a questionnaire, and from the information that we gather, hopefully kind of about what you're interested in, we can do some matchmaking lightly and suggest if you want to buddy up with, you know, half a dozen or so comrades that have been in this workshop to kind of offer peer support, learning. We want to be able to facilitate that because a big part of our goal for this webinar is community building. We need it, y'all, for what we are swimming in. So affinity groups. Then if you want to have like a one-on-one, heart-to-heart with any of us, we'll send this link around, but basically we're making a Google Sheet where you can sign up, and there's instructions in the Google Sheet, but basically you can find a time with one of us and chat about what you're looking for or questions you have or whatever you feel called to do with your time with us. You can email us directly at info@radicalplanners.org. And we definitely welcome feedback from the workshop. We're going to be, like I said, sending out a Google form questionnaire to get that from you because we hope to have more of these going forward, like a 201 Radical Advisors workshop. So please help us make it even better and even more relevant. And maybe tell us if you have some folks that you think would want to join. And lastly, we know that there are plenty of job opportunities out there in this field, and we want to connect you all with them. So please let us know if you're looking for a job, and we'll help you get oriented and get connected and get moving in that direction, which would be great. Lisa?
Yeah, thank you all so much. I know we're at time and we know we want to be respectful of your time, but we've enjoyed this so much. We love seeing all the activity in the chat. Please continue to give us feedback, and thank you so much for your energy and your enthusiasm and your presence. And I really feel like something has been seeded here, and that's so gratifying. So thank you, and let this be a really peer-led community. So excited to see where it goes. Thank you so much.